Okay, this is actually a, oh crap, I think my screen just got hanged again. All right, anyway, so this trade idea is on dollar yen, okay, testing 1.5-year high. So the motivation behind this trade was actually due to the FOMC meeting, okay, that was, I think, when was it? You see, that's what happened when, when you are away from the market for quite some time. Just couldn't remember the dates. Okay. Well, the most recent FOMC meeting. Okay. As I mean, you guys already know, hawkish tone was being sent out, and we see like the Fed is actually carrying forward their whole projection of a interest rate hike. Okay. And they are actually, very inclined towards a tapering of the quantitative easing in November, okay? So that actually led to strengthening of the dollar and things like that, right, across the board. So which is why, the main motivation behind this trade idea was due to the Fed's meeting, okay? And of course, the rising bond yield at that time, to a 3-month high of 1.5%, okay? So I think I'll just go straight to the chart. It's probably going to be clearer. Okay, so this trade idea is actually based on a daily time frame. All right. So as you guys can see over here, there's a blue line, the 112 handle. So at that time, once the Federal Reserve actually sent out the hawkish tone, it actually traded to this 112 level, which if you look at the weekly chart, all right, it has actually tested several times for the past 3 years, okay? So what you're looking at right now is the weekly chart. So this over here is 2019, okay? 2019, 2020, and 2021. It's like a close to 3-year high kind of thing, right? So we've seen several rejections of the 112 level, okay? Tested and bounced back down, tested, bounced back down, tested, bounced back down, and even this year as well. So this time around, with the hawkish FOMC tone being sent out, I was actually wondering, will we see a break above the 112 level, right? I mean, after all, this is I would say this is the strongest FOMC meeting, the most hawkish one for the past 2 years, right? I mean, for the past 1.5 years, we see COVID, so nothing hawkish coming out from them. Okay, the previous year, back in 2019, okay, before COVID started, nothing much as well, okay? So, which is why I felt like, if it actually breaks above this 112 level, a buy level at 112.5 would be essential. And, okay, fortunately, okay, it actually hit and break above the 112 handle, okay? So it went up by around 100 pips, okay? And I decided to close it, okay? Because, as you guys know that CPI, inflation data, okay, and the employment data are two of the most crucial economic indicators that the central bank is actually paying attention to at the moment, okay? Because that will directly impact whether or not, the central bank will carry out the QE tapering, and in the future, okay, carry out a interest rate hike, all right? So with that, okay, to be honest with you, okay, at that time, before the US CPI data will be released, okay, I was actually very positive that, the data is not going to disappoint, all right? So on hindsight, of course, we can say this, that, eventually we would have held on to the trade and it might actually hit TP, like right now, it's coming close to TP level, right? But at that time, I just felt that, it's better if we just close our trade for the target, because after all, we are making quite a nice amount of pips, right? 100 pips at this golden line, dotted line level over here, okay? So after the release of the US CPI, okay, yes, we did receive positive data coming out from the Bureau of Labor Statistics, okay? Then, dollar yen just hovered for the next couple of days before, okay, moving up at the moment, okay? As you can see that it's probably close to like some 10 pips away from the TP level, all right? So I would say the main takeaway this time around is, is this, all right? There will be times whereby when you guys are trading, okay, and you don't know if you should close a trade, all right? Especially when there's major data, upcoming major economic data releases or monetary policy meetings, okay? Like this one over here, the release of the USDJPY data, okay? So I think recently there's some conversation on trade management over at our EcoFin platform, right? So I actually suggested, if you guys want to sort of like manage your trade, some ways being mentioned over there is one way is to close your trade for profit. Second way is to trail your stop loss, okay, to either break even or maybe like some positive figure, right? Positive pips. Or you can actually, another way is that you can partial close your trade. So for example, if you are trading at, let's say 0.5 lot, all right, you can actually close your, close like 0.25 lot for your profit, okay, that you are making at the moment, and maybe trail the remaining half to the break-even level, okay, and let it run and take a risk. So there are actually many ways to go about doing it, right? So you guys have to find the way that suits you most, okay? Most importantly, based on your risk profile, your risk appetite, okay? If you are those kind who likes to, go on a roller coaster ride and things like that, then just by all means, hold on to your trade, right? It may hit TP like this dollar yen trade idea that is, going to happen probably in the next 2 hours or so, all right? It may actually go all the way back down, to hit your stop loss. So depending on your risk profile, depending on, your psychology and things like that, you can actually adopt to different methods of managing your trades, okay? But for this case, personally, I would prefer to close because I know that the CPI data is very crucial, okay? So with that, yeah, I've come to the end of my sharing, okay? So if you guys have any more questions on like trade management, which I feel it's one of the most important most important point when it comes to trading, okay, especially shorter term trades, not like those trades that last for like 1 year or so, all right, then, we can actually, carry on our conversations, our discussions in the EcoFin platform, all right? Okay, so with that, I'll hand it back to Scott.
Kim Hong, I've just noticed Noah snuck a question in there just you were finishing about if you were expecting a rejection at 114 flat. So what are your thoughts there?
All right, 114 flat. Will I be expecting? Okay, so 114 is actually, well, it's actually my TP level, right? Will it actually, let me take a look at the calendar, all right? I don't think there's any major news coming up except for the retail sales data, okay? And the preliminary UOM consumer sentiment data that will be released later today, okay? Looking at the data expectation, personally, I don't think there's going to be a rejection, okay, on the 114 level. But, all right, dollar yen may actually be hovering across, okay, hovering across the, well, I said hovering around, or some may say flirting with the 114 handle, 114 level, okay. Why is that the case? Because first of all, you might remember that today is Friday, right? So that means, traders may be closing up positions, there may not be as much liquidity as we get during the week, okay, on Mondays to Thursdays, okay, as for Friday, all right? So a rejection, I don't see a strong reason for a rejection of the 114 handle. But, if you are thinking of looking at a buy trade for dollar yen, personally, I would prefer to wait for it to break above, okay? Personally, right now, I will look at, say, 114.3, okay, to give me a more assurance, okay, that dollar yen has cleared this 114 handle, before standing a chance to go up further. All right. So you see, no major news to bring the dollar yen down from the 114 level, but there's also no news, okay, no major news that can actually bring the bring dollar yen up above the 114 level. So, with the idea that it's Friday as well, just be careful, all right? Just be more, I would say, cautious when it comes to looking for further upside on the dollar yen, all right?